One of the major focuses of your major focuses is on the culture of the banking and how bad it was before the crash. And you make 7 suggestions, I think very good suggestions in this regard. Do you see any evidence of any backsliding towards the old habits returning? And I say this in the context of, I've heard one bank in particular making some very worrying moves, such as halving the risk support manager role and getting rid of the team leader in each branch. The team leader was in charge, obviously, of the control, compliance and auditing. And this role was brought in as a response to the 2008 crash. So the work of the team leader is being dumped, it would appear, onto the bank manager, who is already overworked. And the branch manager, however, is judged by the sales, which means there's a direct conflict of interest in his or her role in relation to control compliance on one hand, and generating more and possibly riskier sales on the other hand. So does that sound familiar to you, and would you consider such moves a backward step?
I am familiar with what you're talking about, because we've challenged that decision from a negotiating position in that bank as part of a process. And indeed, one of the things we want to do across the industry is sit down with the industry to talk about what is the competency to do roles, what's in the best interest of the customer as well as the institution going forward, what is the opportunity for there to be maximum staff in a location, because in many cases there isn't adequate staff at the moment in a changed environment. So we would share your concerns. The problem at the end of the day is these institutions see themselves as to some extent omnipotent, self-absorbed, and unless you go down the route of industrial action, and it's very difficult to mount industrial action against those kind of issues, we think they are concerning developments. In fairness, other institutions are a bit more sensitive to the role and are engaging with us. And I suppose what we want to try and do is develop a standard in the industry whereby those conversations can be had, and that we go to the highest level standard, because my concern, Senator, would be if those practices becomes embedded, each other institution would say competitively we need to do like-minded things. We also believe the central bank have a role in relation to this, and sometimes we're disappointed that in terms of developments like this, the central bank seems to take a view that that's kind of an operational issue, not necessarily an issue, particularly where risk is concerned. We'd have thought it would be central to that. The central bank has made it very clear to us that they don't intend to involve themselves in industrial relations issues, but these are broader than industrial relations issues. So like we said, in terms of there needs to be an overseer, and if it's the likes of yourselves as a group or a body that talks about values or talks about appropriate structures, they're things that can be looked at to build the central bank in. And I think the central bank has a role to play to act in monitoring this, particularly if there's issues being raised by ourselves or by yourselves.
Yeah, because the danger is obviously that we backslide to exactly where we were before the crash. Now, one issue you don't really touch on is regulation. What is your union's view on the role and the fitness of the central bank? And I know we've talked about that as regulator in 2017.
Well, look, there's a couple of points there. First of all, there's a huge amount of regulation coming from Frankfurt, which is focusing on enhancing capital in the banks. And the bank's strategy is very much geared towards addressing that capital issue at the expense of everything else. Now, I think, going back to our idea of the forum, we need to challenge Frankfurt that do we have to capitalise ourselves to the extent that short-term decisions are made to maximise capital, which impacts on customer services and creates short-term changes in the industry. So that's the kind of the Frankfurt perspective. In terms of property and regulation generally, there's a huge amount of regulation in the industry. You could argue that the industry is over-regulated. I don't believe you can ever over-regulate, but there's a lot of regulation around paper regulation. And I think the core of your question is it properly regulated to be fit for purpose? And we believe, there needs to be proper tests and evaluation in relation to that, because we do believe that there is developments taking place, for example, where we know that in the area of grandfathering, which would be an alleviation given to senior staff in the industry in the past who weren't involved in lending, that the regulator is saying all of those have to be regulated again. Now, that's a conversation that needs to have. The consequences of that, if it was to be implemented willy-nilly, would be that there's no jobs for these people in the industry. So there need to be conversations around that. So I think the central bank has a role in relation to regulation. I think it is stronger than it was before. But I think the question is, going back to the earlier point about operational issues, and the banks using cost-income ratio as a justification for action has to be balanced against regulation generally.
And I suppose what I'm looking at, if we look at some of the more recent scandals like the tracker mortgages, the higher interest rates, or even some of the decisions taken around the arrears cases, we see a lot of consumer-led action and then political action. But I think it's striking how few whistleblowers have emerged from within the industry. Do you think that a potential whistleblower within the bank has a legal protection that's necessary in order for them to break out? I suppose there's a view that the central bank's investigative process is too secretive and too internal to encourage whistleblowers to come forward. Does that concern you?
Well, yeah, I mean, just maybe 3 points to address that. First of all, I highlighted the biggest impediment even to whistleblowing in our industry, irrespective of legal protection, is fear. It is absolutely constant. If you're in a small branch, you don't know whether it's going to operate or function or not, having a whistleblower a protection will not help you secure an alternative job, will not help you being told that you could be identified as closure. So the industry has come through an enormous amount of change. And I think while there is whistleblowing legislation there, it does protect bank officials the same as everybody else. That fear is an inordinate fear. And that goes back to my point about culture, and that talks about external monitoring to make sure it's there. On the second point, in relation to the issue of how you can regulate a bit differently, what we've found in the past, that over many years we would have come as a trade union to say we're concerned about this, we're concerned about that. Again, it goes back to the power of the institutions. Remember, prior to the crisis, one bank said, for recollection, they're the best regulated, the best finance bank in the world, and they ended up in a huge mess. So nobody challenged that. So we need some mechanism, and this is why we think the forum would be of value, to set out what actually needs to go beyond that, to challenge some of these statements. And I think one of the difficulties is you no more than ourselves are dealing with each institution in their own interest. Bank of Ireland is independent, AIB state-owned, Permanent TSB majority state-owned, KBC a foreign bank, Ulster Bank will refer to RBS on an ongoing basis. And we need to have interaction to not only the local management, but other managements across the board. And we do that on a regular basis. So I think you're right. There is legislation, but unless you address fear, bank officials will not speak out. And there is this conflict on an ongoing basis. And that's why we are very insistent in all procedures within banks on discipline and grievance. There has to be external overview and oversight, because our concern is the banks will want, and many employers will want this, to be an internal mechanism that actually deals with issues themselves.
I share your concerns around the rural banking in particular. This was coming from a rural area, and in terms of the social and economic exclusion that the technology within the banks has presented, and also in terms of mobility and access to people. Have your union stopped any of the branches from being closed?
Well, again, we've stopped a number of them. In fairness, the two major banks are actually sitting down with us and talking about looking at a different model, where there is a recognition that there needs to be a presence in localities. And we've been involved in a lot of change. We know that may very well be a different model of a branch, a different presence, a different facility that's there. There are some banks, however, that are very insistent that there's only one solution. And I think I have to say, with regret, no more than yourselves, that a lot of the times that we took those campaigns, we haven't been successful. The banks have just gone ahead and did it. And we've been all left with the kind of the output of that. And that's why in terms of this paper we're suggesting maybe a 6-month moratorium, somebody independent to overview. It stops all of us having to chase our tails for 3 months, talks about what is the valid reason for it, and in fairness there could be some valid reasons to do something like that. If the industry can commit to making sure that there is at least one financial institution, and I don't mean a post office or a credit, there's role for those, but somebody that can provide local business, lending, engage in the local community, I think they are challenges, and you're not going to get that through legislation. But if we impress upon the institutions who are saying to us they're out there to meet the customer needs, their commitment to the Irish economy, their corporate social responsibility, I think you can get within the bank. So I've seen certainly in the two bigger banks a far greater understanding of the need to progress, and probably that comes out of the fact that there's state involvement in relation to it. There's one or two others that are not in that place. So I think we need to bring to the highest level what we can do to address that.
Yeah, because I think particularly as well now that people can't even get through to their local branch, so you know you cannot make a telephone call to speak to anybody within the branch, I think is of concern, particularly to people who are already marginalised and elderly people and people who just want to talk about their money. You know, and at the end of the day, it is their money. It's not the money belonging to the bank, and I think that's an unacceptable situation where I see the central bank needs to.
Absolutely, Senator. But there's another issue, and that is that there's customers travelling 35, 40 miles up the road with cash to lodge. You know, the security risks and all in relation to this. And I think some of those points are not taken on board. And I'd also make the point that whereas in the past there might have been 2 branches in every location, most of the branches now, I would reckon, are still profitable, and the reason they're being closed is the criteria is not returning enough on investment. Now, we're in a different place now, so I think they should be challenged. So I would share many of the comments, and we'd have the same reservations. That's why I think a different formula, maybe a voluntary code overseen by ourselves, might be useful to challenge, to help some of those issues. And rather than deal with them at the next announcement, as we'll all do, and we'll all campaign and we'll all politicise it, and then having to deal with the outputs of that.
I just need to ask you in terms of the tracker mortgages and the redress scheme and some banks not including their staff members. I understand that there's one bank in particular that aren't including staff members in the redress for tracker mortgages.
We've raised this with all banks, and they've told us as of from now that all staff will be included in the redress programme, which is reassuring. Our concern is, though, we need to be reassured that that is the case, because bank staff are no different than anybody else. They're the same customers. They have the same problems, they're the same issues as any other customer that's there. There was some doubt, to be fair. We've raised it, and we're putting it on the record, Chair, today, just to make sure that that is the case, that bank staff will not be treated any differently than any other customer.
And you've got assurances of that right,
yes.
right across the board. Okay, I am pleased to learn that, because it was quite alarming to think that staff would be excluded. I just want to finally ask you in terms of Brexit in the north, and there's much speculation about what Brexit might mean for the financial sector in Ireland. I think it's generally agreed that Brexit is bad news for the economy, but there is a chance that some banks, and indeed maybe even the European Banking Agency, might relocate here. However, I don't know. I know you represent workers in the north too, as you said. Does Brexit bring a risk to jobs in the north that are perhaps call centres or other back office locations for banks based in Britain? And do you have any figures as to how many jobs would be in that category, and are they under threat because of Brexit?
Well, the answer to the question is we don't know. I think there's 2 points we're making. There is a lot of I suppose, statements being made that there's opportunities for Dublin or for Ireland in relation to that. We're just very sensitive that we're not trading jobs off in London to Dublin, and we're involved in kind of one of these trade-off situations, and we're working very closely with our colleagues in the UK in the trade union movement to ensure that we're not finding that somebody's jumping ship over there at the cost of huge jobs losses to here. In relation to Northern Ireland, we don't know. We would be concerned. There's 44,000 jobs in Northern Ireland, generally in the financial and services industry. We're not too sure, and we're doing work ourselves, Senator, and when we conclude it, we'll share it with you to see to what extent are they vulnerable. A lot will depend on when the Prime Minister of the UK announces the intention to move on their strategy on Brexit. We'd have probably a better opportunity to understand that. But there is concerns there, and we're raising these concerns in the North and in Great Britain as well, because we would be concerned. And the reason we're concerned, obviously, it's the Northern Ireland is part of the UK, and it could very well be viewed as an opportunity to
I couldn't agree with you there.
Okay.
But,
well.
obviously, thank you very much.
Thank you.
Thank you, Carla.
Senator Fiona Donnelly.